Hello class. In this video we're going to go through two different problems, very short ones. One shows the abandonment of a long-term asset, and in the second one we're actually selling the asset and receiving cash. So let's take a look at the abandonment first. So as we can see, we've got the corporation is basically getting rid of our gas guzzling trucks, and they're going to get hybrid vehicles. So it takes its old trucks to the scrapyard, but they don't get any money out of it. So on the books, we have this fleet of trucks that's listed for $195. And with those trucks, there's been accumulated depreciation to date. Now, when they're getting rid of the trucks, we can't keep saying that they're on the books when they're not. So in the beginning, what we're going to do is just see trucks has a debit balance of $195. We're going to credit trucks for $195. So we're saying goodbye. The accumulated depreciation has to go at the same time that the asset goes. But they didn't give us accumulated depreciation. What they gave us was a carrying value. Now you guys are all very smart intermediate students, so you know carrying value is simply cost minus accumulated. So if cost minus accumulated is $25,800, then in order to find accumulated, what we're going to do is just solve this problem, taking that 195, subtract out the carrying value, and that'll give us our accumulated depreciation for 169,200. So it looks like, they bought it for 195, they sold it for not sold it, they depreciated up to 169,200. But it's gone now. So if we're going to get rid of these two accounts, we have to make debits equal credits. So what we call this is a loss. So it's not an expense, it's a loss. And the reason is that this is a peripheral part, and we're not selling trucks for business. We are using trucks in our business. So this is a loss. So if you need a debit, you're going to have loss here, 25,800. And that's how you solve your abandonment issue. So now let's take a look at what happens when we actually sell it. Okay, so in this problem, I give you a little tip, and it says, when computing depreciation, look at the dates. You are doing a partial year of depreciation in the first entry. All right, so let's take a look at this one. Okay, this group is selling one of its plant assets on April the 1st of the current year. We're going to assume it has a December 31st year end. So they've taken, let's see, it says the asset was in service for 5 years and as of January 1st. So we've used it for 5. We're getting rid of it April 1st. So that means we used it January, February, March, 3 months out of the current year. So in order to get our depreciation up to date as of April 1st, we're going to take cost listed here minus residual value, 93,000, and divide that by 15 years. So each year of depreciation is 40,500. Now, because we only have used it for 3 out of 12 months, we're going to take 40,500 times 3 divided by 12. That'll give us our depreciation for the partial year of 10,125. So now it's April 1st, and we've recorded our depreciation, and now we are selling the unit. So when you're selling something, you're going to have cash coming in. The asset is leaving. So in order to get rid of the asset, we have to credit it. When it leaves, the accumulated depreciation with that asset has to leave as well. So what we have to do is go ahead and we'll show cash and we'll debit it for the amount received. Plant asset, we'll show it going for the original cost. Now, when we get to the accumulated depreciation, what we have to do is remember that we've used it for 5 years. So we're going to take 5 years times 40,500. That'll give us our 5 years of depreciation. Then we're going to add in the amount we've taken for the last 3 months. So when we add all that together, that'll give us 212,625. So we plug in all these numbers and we see that debits don't equal credits. If we need an extra debit, we're going to call it a loss on the sale, sometimes called loss on disposal. If we need a credit, then we would have down here, would call it a gain. Okay, so gains are like revenues. Revenues have credits. So in this case, we had the loss of 7,875. We go ahead and record this. Debits equal credits. The asset is gone, the accumulated depreciation is gone, the cash is accounted for, and we are all set.